There are some rumblings happening with the Federal Reserve and its recent repurchase agreement, also known as Repo, and the U.S. banking system that certainly has the potential to turn into something much more serious. Now, I'm not making this video to inspire fear, but red flags are raised, and this is what you should know. Full disclosure, I'm recording this video a few hours before I spend the next 3 days in transit, so I will be replying to your comments as often as I can, and I'll be posting another video once I'm settled again, but that won't be for a few days, unfortunately. Suffice to say, I will be eager to see how this plays out and the effects it will have on the cryptocurrency markets between each of my flights. So, diving right in, Investopedia describes a repurchase agreement, or repo, as a form of short-term borrowing for dealers in government securities. Repurchase agreements can take place between a variety of parties, but the Federal Reserve enters into repurchase agreements to regulate the money supply and bank reserves. Now, because repos occur quite frequently between banks and the U.S. Treasury, it is the base layer for much of the U.S. financial system. They provide banks with the liquidity needed to meet their daily operational needs and maintain sufficient reserves. As was explained earlier, the Fed only enters into a repo in order to regulate the money supply and bank reserves. Basically, when the Fed has to get involved, it's because cash reserves in banks are running low. When this happens, we often can see increased borrowing costs, meaning less people can afford to take out loans and less credit is issued, which can lead to a credit freeze. And the United States financial system relies heavily on the flow of credit. So to put it plainly, a credit freeze is a big problem. Taking a look at sites like zerohedge.com can send you on a downward spiral into thinking that the world is surely ending, because it is article after apocalyptic article of bad news, especially regarding something that has the scope of cascading implications like the US financial system. So I think it's also wise to seek out what the other side has to say about the situation. You know, the ones who usually assure that there's nothing to see here, just keep your nose down and everything will work out just fine. So, in an effort for myself to get a more well-rounded exposure to the situation, I have joined a mailing list for one financial writer of Bloomberg. I know it was a big sacrifice, but in today's email, I was surprised to read a more balanced opinion of the matter than I expected. Now, more balanced, not perfectly balanced, because he did reiterate many times that it's probably nothing, just a hiccup. He did entertain the idea that this could be a symptom of a much bigger problem, which to me signals that this could very well be the signs of an ever-approaching reality check for the U.S. banks, the U.S. Treasury, and the Fed. So why am I talking so much about this and not Bitcoin? Because clearly this is a cryptocurrency channel. Here we go. Let me remind you that the last time a credit crisis occurred over 10 years ago, there weren't a whole lot of options for people to run to in an effort to find monetary sanctuary. In fact, the last time we experienced a worldwide financial crisis, it sparked the creation of cryptocurrencies. Now, albeit cryptocurrencies were a long time coming, far before 2008, but regardless, the timing was nothing short of perfect. This is important because we're talking about digital currencies that are not subjected to the arbitrary whims of a particular government or central bank, which, by the way, the Federal Reserve is not owned by the government. Anyway, some of these cryptocurrencies, which were designed specifically to address these issues, and by I mean address, I mean giving an alternate option, these issues of dealing with debt, with an inflating money supply, and with the always opaque and questionable motives behind certain economic policies, which, by the way, all of those things we are seeing play out as I am recording this. So Bitcoin and cryptocurrencies have benefited from global economic turmoil in the past, but those past situations can certainly pale in comparison to what might transpire in the future. I think investments like precious metals and cryptocurrencies will see a surge if these red flags aren't quelled very soon. And perhaps finally, those who have been skeptical of the world of cryptocurrencies will be forced to have an open mind for their potential of serving as an oasis in unstable times. Perhaps the tables will finally be turned, and transparency, immutability, and decentralized nature of things like Bitcoin will shine compared to the dark times that the greedy central bankers have caused.